What's good? What's good? What's good, family? What's good? What's good? What's good? What's good? Can y'all see me? Can y'all see me? Can y'all see me? Let me know if you can see me in the chat. Let me know if you can see me in the chat. Let me know if you can see me in the chat. Send this live out. Send this live out. What's good? Let's talk about it, man. Let's talk. We got a lot to talk about. I want to talk about what's going on today, man. Let me know where you at. Let me know where you're from. You know, yeah, I had a great response last time. Everybody was like, "Trap, man. We like that live you did other time, bruh. Like you gotta do that again, you hear me? So here we go. I'm gonna come back to it. Can you hear me? 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 All right, let's go. We got a lot to talk about today. Probably need about an hour of your time. Yeah, no, need about an hour of your time. Before we get into it, man, let me know where you're from. Before we get into it, let me just let Trap know where you're from. You hear me? You know what I'm saying? Let Trap know. Let Trap. I'm trying to get my drink. Let Trap know where you're from. You know what I'm saying? So we can talk, man. Let me see. Let's shout out some people out right quick. You feel me? Let's shout out some people, man. We got Argentina in the building, Birmingham in the building, the islands, California, Memphis, Tennessee. Jesse Schultz was good. KT Tactical, man. What's up with my people?
Whoop they do.
Patreon people in the building, man. Bronx, New York in the building. 843 in the building, man. I see you. Mississippian. Shout out to Mississippi in the building. Savannah, Georgia in the building. Detroit in the building. H-Town in the building. I see y'all, family. I see y'all. This episode is brought to you by me. All right, man. So I want to talk to us today about some things, man. We had a lot going on in the market, and I feel like we had some people that was real, just nervous. We had some people that was nervous about a lot of things that was going on in the market. I got my notes because I never want to act like I'm just freestyling. I do a lot of freestyling, but I like to have my notes so I can stay on track to what I want to talk about. I want to make sure I'm not wasting y'all time. I got a super chat, man. Super chat, $2 from Bishop Nelson. Faith and finance from Freedom, man. Blessings, family, man. Man, thank you, family. I appreciate that. Frank from NC was good, brother. So let's talk, man. Before we get into it, I want to ask you a question. And I want you to be real with me. How many people was nervous this week? Just keep it real. Talk to me. How many people was nervous this week? Because tonight, we're going to get on a chart for a second. We're gonna get on this chart for a second, and I'm gonna take an opportunity to just help you tone it down, help you get a little bit of yourself back, and let you know what I feel is ahead, based on what I see, based on the news, based on the information, based on the data. So if you're in the chat right now, this is a safe place. Let us know in the chat if you was a little nervous this week. Let us know in the chat if you was a little nervous this week. Somebody say, I ain't gonna lie, Trap. I'm still a little nervous. King Me 305, you in the Patreon. Of course you ain't. Let's go, man. Tiffany said me. Jordan says me. I'm still pimping. What up, Trap? Hell yeah, be nervous. Nah, I'm just positioning. Chief Killzone say no, sir. That goal was perfect heads this week for sure. I lost money, but I thought in some pulleys, cool. I was, bro. Not me. I'm waiting for the face to go up. The back and forth was for me, for sure. And it's okay. Like, I know some people, you wasn't nervous. It's cool. I wasn't nervous because I did it before. I've been here before. This ain't nothing we ain't never did before. But I know there's a lot of people that haven't been here before. I know there's a lot of people that don't understand like what's going on. And it's not your fault. You new to the market, so you really won't get busy. You really want to play the game. You really like trap. What the hell going on? Somebody make this make sense to me. You know what I'm saying? I sold my kids to buy something. I lost a lot. I'm depressed, not nervous. You know the saying, scared mother don't make no money. All right, good. So let's get into it, y'all. So do me a favor before we get into it, man. Make sure you like, make sure you subscribe, please. Uncle T, watch out, man. Watch out, man. um, super chat, lost joke, no message, man. Just showing love. I thank you, everybody that's showing love, man. I do this for y'all. So let's get into it, man. We got a lot to talk about today. So I'm gonna need about an hour of your time. And make sure you send this out. All right, let's go. So we saw a lot happen today, right? This week in general, we saw a lot happen this week. And let's start where it all started off from. It all started last Friday, right? When Donald Trump made a tweet about putting 100% tariffs on the market. And essentially what that did was it just made the market sell off, right? Mind you, the market was just doing fine. It was at all-time highs. We just kept seeing green after green after green after green after green. All-time high after all-time high after all-time high after all-time high. Every stock we could think of, all-time high. Options printing. Puts getting slaughtered. All-time high. 100%. And then Donald Trump comes in and he says, China is being disgruntled. He says he's thinking about putting 100% tariffs on China. And the market just sold completely off. And then he had a follow-up and said something about soybeans and soybean oil. We might not want to get stuff from China. And I've always said this in my Patreon on Trapping Tools. I've always said, man, listen, China is the wild card. All of these deals we supposed to be getting and all these things we supposed to be doing, until we get a deal done with China, nothing is safe. Now, we had an extension, but we didn't get a deal done. Now, of course, sell-offs are always abrupt. Somebody said, Trap, you wasn't lying, bro. Trump is a stop loss. I told y'all, man. He is a stop loss. He is risk mitigation by himself, man. He is risk mitigation, man. Right? And so I want to walk us through a couple of things, man, if y'all don't mind tonight. And I think this will help us see what's going on, what's going forward. We'll get on a chart so you can see a couple more things. And my goal is to help you find comfort in the weekend. Okay? So let's first start off with another thing that was really good for the markets this week. Big banks. So as we know, my favorite bank, Goldman Sachs, to trade, they killed it. Goldman Sachs, JP Morgan, these banks did really, really well this week, which was good for the market. But on the other side of the big banks, we had small banks that really put some fear into the market. And here's why. We got to understand that there's an issue when it comes to liquidity, when it comes to private banking. And the reason why is because there's this thing called private credit, right? Somebody say, can you explain with an example of how Trump is a stop loss. It's just simple. Just saying whatever Trump say the market gonna do. That's all. And so, but think about it. When it comes to that, the private credit is kind of like it doesn't go under the same regulations as the big banks do. So it's not just small banks, it's small banks and the private lending that's causing the issue right here. And the reason why is because unlike the big banks, you don't have to go through as much with the smaller banks because, they need the cash, they need the liquidity. So they'll do a little bit, but they're not going to send you through the ringer like you would if you had to go through a JP Morgan or a Morgan Stanley or, you know what I'm saying? So because of that, now you can't track all those dollars, right? And then that becomes somebody say, be honest, do we have to pull out? You don't have to do nothing if you don't want to, Queen. You know what I'm saying? You have to do nothing if you don't want to. This is not me trying to provoke fear in you at all. Because if you listening to me, I'm going to tell you, keep putting more money in the market. So you got to be mindful who you listen to. Some people going to tell you should be getting out the market. I'm going to be telling you, yo, it's the time to be putting more in the market. It's the time for you to be dumping. You know what I'm saying? So, take what I say with a grain of salt. Only invest what your risk capacity can handle. You know what I'm saying? Or can I give myself a shout out right quick, y'all? Can I give myself a shout out right quick, y'all? Y'all mind if we are officially, before I wasn't officially, I just had it. Now I am officially 100% recovered from the $1.5 million loss. Come on, man. That's right. So I had it, but I didn't never. I had plays that was green, that was good, but I never took the profits on it. My mic cut off. My mic cut off. Oh, okay. I think I'm good. Yep. So I am officially 100% recovered from the $1.5 million loss, man. Listen, that was a hell of a journey to be on. And man, I'm excited about that, man. You know what I'm saying? And did it by trading my way through it. You know what I'm saying? So I want to shout myself out for that. Definitely going to show it to the people so y'all can see it. You know what I'm saying? But anyway, let's get to it. Y'all ain't come here to hear my shit. So that can raise some concerns. And the reason why that can raise some concerns when it comes to the private lending and the private credit issues is because now what happens is when people can't pay stuff back, when people can't, pay the mortgages and pay the houses, that becomes an issue because it's hard to track that, right? It's easy to track it with the big banks. But then what happens is you already know that the little banks are tied into the big banks, so it becomes ripple effect. So they're going to try to get a hold of that. So that can be an issue, right? Because that it doesn't give investors in the market a clear path. Am I making sense? Am I making sense? Does it make sense? Right? So that's one thing. But here's the next thing, right? Notice that the price of gold is going really crazy. Now, that's not for nothing. That is for a clear reason why the price of gold is soaring like that. And so I want to break that down for you for a second, right? So I wrote something down that I wanted us to see. I took some notes from Jamie Dimon's conference, right? Here's what happened. I want you to listen to this when I say this, right? So Jamie Dimon said in his meeting that he quoted that the Fed reduced their balance sheet by 2.2 trillion. And also by doing that, by reducing the balance sheet, meaning they're not buying assets, because the Federal Reserve does buy assets. But also, he said that they were going to stop tightening, which is QT, quantitative tightening. Meaning, that's saying that, okay, we're going to start printing a little more money and we're going to start buying a little more assets to put something in the market, right? But then he said, watch this. Then he said in the last meeting that the QE may be about to start, right? Which tells us that they're going to start printing a little money. You feel me? Now, let's see how does that work, right? So watch this. Quantitative easing simply means printing money, which is flooding the market. Now, that's going to make your money lose value. You know that, right? But watch this. On October 29th, they're going to have a 0.25% rate cut. But then there's a 94% chance that there's another rate cut in December. And watch this. The dollar isn't collapsing. The dollar is getting weak. And nobody said the dollar was collapsing, family. What are you talking about? All right, chill out. All right, so watch this. So what's happening is there's a 92% rate cut in December. Watch this. Let's go a little further into that, right? So there's also right now a 75% chance we get a rate cut in the early part of 2026. Now that's interesting. Why is that interesting? It's interesting because now if the Fed is going to start cutting rates at this rate, the Fed going to start cutting rates at this rate. That's crazy, right? But the economy does not show that we need that. Now, here's why. Because we see that job loss and price stability is not where it needs to be at. How do we know that? Because we heard Jerome Powell say in his meeting, we heard him say this, and this is why this was clear. Listen to me. Now, I want y'all to tell me if y'all think I'm wrong. Because if I misinterpret something, I'm okay with saying I misinterpret something, right? Watch this. Here's what he said. He said, and I quote, "The economy is strong, but the buying pressure and job pressure is on the lower income and lower purchasing power in America." No, I'm sorry. The lower income and lower purchasing power pocket of the economy. That's what he said. Now, if you and I know that it's more poor people than rich people in America, and if the pressure is on the lower purchasing power and the lower pockets of America, how can we have a strong economy? I want you to answer. Now, this ain't me saying this. This came straight from Jerome Powell's mouth. Right? This came straight from him. This came straight from him. He said, the economy is strong, but, as he said, gold is not going down, man. Gold had a slight sell-off from reaching all-time highs. Anytime a stock go down $3, y'all start panicking. You know what I'm saying? Gold been running. The thing is up 60% on the year. It done doubled with everything else it's doing. It go down $4, $5, $6. Y'all think, oh, it's crashing. Golly. Jeez. Y'all got to chill out. Hey, some of y'all got to chill out. You got to chill out, man. Right? All right. So here's what I want y'all to understand. Right? Here's what I want you to understand. With a statement like that, we got to pay attention to that. Here's why we got to pay attention to that. The Fed has what's called a dual mandate. A dual mandate is jobs and price stability, right? Job stability, meaning making sure people got jobs in the market, and then price stability, meaning making sure people can afford stuff. So go look that up. Write that down, look that up. The Fed has what? Dual mandate. That's what we looking for. Dual mandate. That's the word you got to look for. All right. Watch this. If the pricing pressure is at the bottom half of the economy, the bottom pockets of the economy, we can't have a strong economy. But here's what it's telling us. It's telling us that when he says there's a strong economy, he's talking about the top 1%. Do you agree? We got 1,000 people in the chat. Let's go, man.
Whoop-de-doo.
All right, got 1,000 people in the chat. All right, let me see something. All right, so watch this. Yep, dual mandate. Looked it up. So I want to give you some game so you can, because it ain't about me, like it ain't about just throwing stocks out here. I want to help y'all explain what's going on. Then we get on a chart, which you're going to get on a chart later. I already got it pulled up so we can see some stuff. But I want us to get it. All right, so here we go. Let's go a little further. So then watch this. Not only did we get to that with Jerome Powell, now the next thing we want to say is this. Watch this. So I wrote this down. We got to pay attention that gold is up 60% year to date. Well, why is gold up 60% year to date? Because the smart money, watch this, the smart money is preparing for cheap money. Okay, that's a bar, y'all. I don't know if y'all I don't know if y'all heard that right. I'm gonna say it again. The reason why gold and silver is running is because the smart money is now preparing for cheap money. Does that make sense to everybody? All right, so let me show you how that makes sense. When Jerome Powell and the Federal Reserve starts to print money and cut rates at the same time, quantitative easing, watch this, your dollar starts to do what? Lose value. Well, watch this. When the money starts to get really, really cheap, I want you to understand something. Stocks will soar. Okay, let's dig into this. Stocks will soar when money gets really, really cheap. Why? Because big institutions and big people like Apple and all these other people and these banks, they start to lend money out. They start to get money really cheap. And what that starts to do is earnings start to go up, right? Why earnings start to go up? Because people got money. So then what happens is people start to invest more when money is cheap. The cheaper money gets, that's when people start to do stuff like what? Refinance their houses and stuff. Because it's cheaper. Right? Now watch this. Because that starts to happen, watch now what happens. You and I lose purchasing power on our dollar. It now costs, now I'm not saying this like y'all don't know this already, but I just want to set us up so we can know what's going on, so we can know how to move forward. Watch this. So now what happens is, as stocks start to soar, watch this, as your money starts to lose power, guess what happens now? Gold, silver starts to do what? Go up more in price. Why? Because wealthy people are not crazy. They understand that the dollar has no value. So you take the dollar that has no value and you buy things with value, which is stocks, which is crypto, which is real estate, which is gold and silver. So that becomes the protection against the dollar. That's what we call hedging, right? So now they are hedging their bets, right? And so now they making money while gold is going up, and they making money while stocks is going up. Now this is called, watch what I'm about to say here, write this down. This is called the debasement trade. I told you I come to cook with y'all tonight, man. I come to cook with y'all tonight. Make sure y'all share this out, man. Make sure y'all share this out. 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 All right. You get what's called the debasement trade. And the debasement trade is simply saying you're trading one asset that's going to make money while another asset loses value. Okay? The finance corner said, hey, Trap. Y'all hear me? Y'all hear me? Y'all hear me? We back. We back. We back. We back. We back. We back. I ain't even say nothing. I ain't say nothing. I ain't say nothing. All right, let's get the lights up. I'm here. Y'all can hear me? I don't know why that thing be doing that. Sometimes it be clicking out on its own. You hear me? Sometimes it be clicking out on its own. When I hit them, when I change the color on y'all, I hit that blue. You hear me? I hit that blue on them. Oh, thing went out. You hear me? We hit that blue on them and that thing went out. You hear me? All right, let's go. All right, so we gonna talk about that for a second. Right? We're gonna talk about the debasement trade. Right? We're gonna talk about the debasement trade. And so the debasement trade is simply saying that you are trading one asset class for another asset class. Watch this. You're trading one asset class for another asset class. You're trading an asset class that makes money because the other asset class is losing money. Okay? Marquita say, I just need a good play. That ain't never the mindset that's gonna make you a lot of money in this market. I'll be honest with you. For the people that just need one good play, you're gonna always be at the whim of somebody else. You hear me? All right, so let's go a little further. The debasement trade. So when it comes to the debasement trade, I want to talk about a couple of things when it comes to this. When it comes to the debasement, okay? What asset classes make money when the dollar loses value? All right, let's think about that. All right, let's think about that. 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 What asset class makes money, right? Bro, it ain't me, bro. The thing just be muting sometimes. I gotta pay attention to it, man. I don't know what the hell. It ain't even much the button. I don't even got a button to press. My hands is in the air like a police. You hear me? My hand is in the air like the police. I don't know what the hell be happening. You hear me? Let me see, is the mic? Okay. That is it. We got it. Okay, yeah. It's the mic. Yeah. I got you. It's even when you touch the mic. Okay, cool. I got it. I'm on now. We on and popping now. You hear me? All right. So what asset class gains value when the dollar loses value? That's where the debasement trade comes in at. Right? So things like real estate, things like stocks, things like gold, things like silver, things like precious metals. These things gain value when the dollar loses value. This is why I'm not mad at the people who pushing crypto hard right now. Because here's the thing. So you got to think about it like this, y'all. The big money gonna always try to shake y'all out. The big money gonna always try to shake you out because it don't want you in the money. So here's what happens. Watch this, y'all. I'm about to tell you something that's important. When the Federal Reserve starts to print money, and they start to cutting rates, and big banks and stuff start to lend out money at a cheap price, guess what happens? The wealth gap increases. The wealth gap increases. You know why the wealth gap increases? Because the everyday person cannot afford to do day-to-day things. And so, because you can't afford to do the day-to-day things, the everyday things, what happens is the people who have the money to invest and the people who have money to have these assets, they increase their net worth. Am I making sense here? So I want to get on a chart with y'all to show y'all some things, man. All right. But also, I want to tell y'all, before we get on a chart, here's what I'm looking at going into Q4. Now, I'm only looking at this like October is really just doing us what September has given us. But let me give y'all a number. Let me give y'all a number right here. The last 15 years, Q4 has given us anywhere between 5 to 7% return. That's on average. So October, November, December, on average, has given us 5 to 7% return. I just want you to think about that. On average, if you heard what I just said, say we trapping in the comments. Say we trapping. Say we trapping. Let me know y'all rocking with me right now. Just let me know y'all rocking with me right now. I just need to know. I don't think y'all really heard what I just said right now. I don't think y'all really just heard what I just said right now. I don't think y'all heard what I just said. I don't think y'all really paid attention to me. I don't think y'all paid attention to me. I'm going to say it again. In Q4, October through December, that's Q4, the market over the last 15 years has given us 5 to 7% in Q4 alone. 5 to 7% in Q4. Watch this. Watch this. This Q4, we're going to have a Federal Reserve that's cutting rates, probably twice. You're going to get one on the 29th, and you're probably going to get another one. You probably get another one going into December, which is going to then come back into what? The Santa Claus rally, which is going to go all the way into the next year. And then they have another one. They got a 72% chance of getting another cut beginning of Q1. I'm just saying, based on the data, because we already know the Fed cutting rates, and you heard Jerome Powell say, ain't nothing changed. October is not the most volatile month of the year. It's September. But we didn't get a September. We got a September that was crazy. And so October say, I got you. Let's get the likes up for me, y'all. I would appreciate that. Then we got 1.3 people watching, man. Let's share this out if y'all don't mind. So think about that. In Q4, you're going to get a Fed that's going to cut twice. You're going to get a Fed that's going to cut in October. You're going to get a Fed that's going to cut in December. And then you're going to get Trump in 2 weeks saying him and China are going to have a sit down for a meeting that they did not cancel. I'm just saying this is a setup for a big rally. And if you like me and you listen to our boy Tom Lee said he think we can go to 7,000 by the end of the year. And I ain't gonna lie, Tom Lee ain't never led me wrong. Let me just shout out the Patreon members all right quick, man. Shout out to my people in the Patreon, man. We've been dominating, I ain't gonna lie. You know, we made a killing off gold, we made a killing off of MU, made a killing off, you know, we got a silver that's going up right now. We just put a new gold play in. So let's just, you know, let's shout out to them right there, yeah, man. Shout out to the Patreon if you want to come join the Patreon. Comment us, man. The link is in there. If you're not, come to my Instagram, comment the word print money. So in the chat, let me know. Now, y'all know my goal for the end of the year was 6,800, and we right there. Right? We right there. All right. So here's what I think going into the full quarter. Here's what you should be at. I think you should be investing in the MAG 10. Not the MAG 7, the MAG 10. If you don't know what the MAG 10 is, go look at it. I put it on Instagram. I put it on my YouTube on Traffic Tuesday. The Patreon looking better. That Patreon looking better every day. Trap, I'll be in Atlanta Sunday for sure, fam. Watch this. Industrials, the MAG 10, industrials, more Bitcoin, and financials. The link for the Patreon is in the description. Super chat, $1.99. Thank you, family. Traders Armor, thank you. All right, and then what we got going on over here? Nettie, what's up, Queen? All right, so I think going into Q4, and I'm gonna get on a chart and I'm gonna show y'all something that I really want y'all to pay attention to. But the MAG 10, industrials, Bitcoin, financials. That's what you need to be at. And number 5 on the list, precious metals. Precious metals. Because we just talked about what? The precious metals gonna do what? They are hedges for the big money to do what? They playing both sides of the bet. All right? Pascal, not a helicopter fan. Right? So I want to say that to us, right? Now, if you're a little risky, then you can say, yeah, Trap, I'm going to play with small caps. But I want to watch this down for you so you can see it. I wrote this down. First come the rate cuts, then the Fed stop tightening, then they start printing money, stocks go crazy. Right? Watch this. Here's how the breakdown go. First comes the rate cuts. Then the Fed stops tightening. Then they print the money. Then the market goes crazy. I appreciate you, Michael Brown, for the super chat, man. I appreciate that. All right, so the next thing I'm gonna do right now, man, I want to get on this in that order. That's how I go, fam. And here's the thing: Jerome Powell done already told us, hey, we getting a rate cut, so we getting a rate cut on the 29th. Then he already told us in the meeting that they just had. This is the last meeting they just had the other day. He said, hey, we gonna stop tightening. And then once they stop tightening, watch this. When they start saying they gonna expand their balance sheet, which is what he also said, he said we reduced our balance sheet by 2.2 trillion, meaning they stopped. Now they about to expand the balance sheet, which means they about to start back to doing what? Buying assets. Why? Because the Fed is a what? It's an independent agency. It's not a part of the United States of America. If you haven't read the book, The Creature of Jekyll Island, go read it. All right, let's get on the chart right quick. Y'all ready to get on the chart right quick so I can break this down to y'all? And then I'm going to let y'all go about y'all business. I ain't going to keep y'all too long. I just want to put you in space, position for this week. Right? I just want to put y'all in position for this week. Where's my pen at? I just want to put y'all in position for this week. And if I put y'all in position, this is give y'all something to look at this week. I'll give y'all something to look at this week, man. Give you something to look at all week and on your chart. And that's it. I'm gonna try to keep it as simple as possible without going deep into it, because I know I've been in the chart real heavy. Y'all know your boy been in the chart real heavy. And so I'm gonna try to keep it simple. But first thing I gotta do is show you this from a bigger perspective, so you can kind of rock out. All right, so I'm gonna open it up. And I just want you to see a couple things right here. I'm gonna just circle something. Can everybody see the chart? Can everybody see the chart? Can everybody see the chart? Say we trapping if you can see the chart. Say we trapping if you can see the chart. Somebody say, I found you last night. I dig your style. Grab MPS 78 side up. I appreciate you for sure. I just want us all to win, man. And I got to start saying this because I see a lot of people. This not financial advice, y'all. This is just me telling y'all what I see. All right, so first of all, watch this. Let's start here. So the first thing I'm going to do is this to help y'all make this easy. I want y'all to see something here. All right. Now, the reason why I drew that line right there is because this is going to tell us one thing. Until the market gets back on top of that line, that's when the sellers truly take over. Right? They need that. Right? They need that to reclaim authority. Right? Somebody say that. Reclaim authority. All right? See this. Reclaim authority. So here's what I want you to understand. So here, I ain't going to go through all of it. So here, this is called a lower high. All right? And then here you have a lower high. Right? So we way back, though. We way around April sometime. March, April. And then you get this right here where it bottoms out. Now, then the first thing it does, it takes out this one. So now you have what's called a higher low. Then when you get here, you have what's called a higher low. Everybody see what's happening right there. Everybody see what's happening right there. Right? Everybody see what I just put up right there. Something simple, nothing too crazy, but we're going to get to where we're going. I just want everybody to see what we're going to see right here. All right? So then notice here, we create what? A higher high. So we have a external trend and an internal trend. Right? Everybody with me right now? I ain't lost nobody. Everybody's still on port. I'm just gonna get us to where we going in the long run, but I just want everybody to see the current things that's going on. So watch this. I want to show you something. So you see this finally takes over that. Right? Does that make sense? Right? Does that make sense? So then you see this high until this gets taken out. When that high here takes this high out, now we've set another what? Higher high. Does that make sense? Everybody with me right now? Everybody with me right now? 100%, brother. Yep. You got your shoulder, you got your head, you got your shoulder. 100%. You saw it, brother. Okay. Now, once you get this high right here, you've now officially broke that external structure. Does that make sense? Right? Once you get that high there, which broke that 613, you've now essentially broke the external structure. So the ones that was inside that we talked about, all of this right here was internal structure. Once we broke that 613 and got a higher high, we created an external structure. Am I making sense right there? Just simple, not going into the candle, not going into this candle says this, not going into this chart pattern, not going into just keeping it really, really simple so you can see it and say, I get it. Right? Does that make sense to everybody? Nothing. I'm not trying to sound prolific. I just want to make sure you can see it, and then you can start saying, okay. Because if you can start identifying higher highs, lower lows, and lower highs, if you can start identifying those, I promise you the market will look so much better to you. Hey, Nettie. Right? Just let me know that right quick. If that makes sense to you, if you can pay attention to that, everything I just said makes sense. All right, cool. I'm gonna erase all that so we can get to where we gotta go at. That's what I wanted to see. Now watch this. So now I'm gonna get off the screen from there. Now watch this. I want to do something else to you. So where they said that, right? So this is a higher high. And watch this. This is another higher high. So watch this. When this comes down here, we can't create another higher high until we break this. So anything that happens below this is internal structure. Am I making sense right there? Am I making sense right there? You 100% can see it better on a line chart, but I want them to see it right here first, and then it can start. You know what I'm saying? So, yep, you're right. All right, am I making sense? You can, right? So until we break that, we do not have a uptrend. We got to break that. Am I making sense? So right now, we still have an overall uptrend. Okay, cool. So then once you break that and you come here, you create another what? Tell me in the chat. That last one I just circled, what that is, that's another what? That comes a what? That becomes a what? The one I just circled, that's called a what? What that's called? The one I just circled, what is that called? What is that called? The one I just circled, what is that called? That's called a higher high because we went up. There you go. So now, until we break that, we don't have another higher high. But then we break it right here. And then we create, which creates another what? High. This is an equal high. So I want you to pay attention. Right? So you got to break that, which just comes here. That's cool. So then you get another one here. Right? So then you get another one. So now the market is giving us a form of higher highs. Now, you see them. Does that make sense? Right? All right. All right. So now I want to show you something before I get into where we at today. I want to show you something because y'all be seeing the lines. And you be like, bro, the market don't even move like that. What them lines be looking confusing to me, Trap. Like, I don't be even seeing that like that, bro. That don't even be looking like that. And I get it. Right? Because people don't be teaching you the way that they learn. But watch this. I'm going to take this green marker and do this. Watch this. Boom, 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 boom. Now watch this. So now what I want you to do is when you be on Instagram or you get on YouTube and you follow somebody and they showing them lines, know that those lines are really a bunch of candles and they just showing it to you in the line chart perspective. You feel me? Am I making sense? Because I know sometimes you may be looking like, bro, like, that don't look like that on a chart. You know what I'm saying? You be like, bro, that don't look like that. He said, I didn't know we was beatboxing. You feel me? Right? So you may be looking at somebody when they draw them lines, you be like, bro, that lines don't look like that on the chart, bro. Like, but then now you like, oh, nah, I get it. Right? And that's all I want you to do is just see it. And so now it makes sense to you. So that's all I wanted to do, y'all. But let's get into where we at right now. Cause I don't want to hold y'all all night. Right? I don't want to hold y'all all night. I want to get to what we got to get to so we can lock into, what's going on and what we see. And, I'm all about helping us get better, y'all. So far, tell me how y'all feeling though. How y'all feeling? I just realized Trap inside with us on a Friday night, man. Listen, this is what I do. Yep, that's right, Nikki. It's so that they can see the structure of the market. Yep, 100%. All right, so now let me just bring it to where we at right now, y'all, so we can get into this, so I can let y'all go, handle y'all business tonight. So basically what I want to show y'all is I want to prepare y'all for next week. If you're in my Patreon, if you're in Master the Triple Beam, we got a call tomorrow. So let me knock this out. So I want to prepare y'all for this week. So essentially, here's what I want y'all to look at, right? As we looking at this game and as we play this game, for me, it's all about helping y'all play the game in a way at a high level so we can see what the heck is going on. Right, so the first thing I want to do is show you that overall, we are in what's called a macro uptrend, which is we got highs, 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 higher high, higher high, higher high, higher high, which is compressed of it. What? Yep, because that came up. So then you got, so y'all see that? All right. All right. You feel me? So we see what's on the chart right quick, right? Everybody see that? Nobody not confused. Everybody get it, right? Everybody get it? Everybody understand what's going on? Everybody saw we just painted? Let me see it. All right. You live right now? Yeah, told my man. Look at my brother in the building. Man, my brother told me in the building, man. What? Toby Weekway, my brother, man. Man, just made me. That man just made my day, man. Man made my day right there. You heard me? All right. So everybody understand. So here's where we gonna go. I'm gonna keep this short. I'm gonna keep it sweet, so we can end. Just so we can get this part, so we can understand. So we are in what's called a micro uptrend, right? But what I want to do is define it for you so you can see it. So here's what I want to show you. Here's what I want you to see. This candle right here, this red candle that I'm got this mark on, I'm gonna just draw a green sign on it on top of it so you can see it. That candle right there gave us an institutional footprint. And what I want you to think about is Friday when Donald Trump made that tweet. Listen to me. When Donald Trump made the tweet Friday, this is the footprint that the institutions left on the chart. Okay? No. Belina, not micro, macro. M-A-C-R-O. M-A-C-R-O. Macro. Macro means big picture. Micro means small picture. Macro, M-A-C-R-O, that means big picture, y'all. So we in a macro uptrend. Watch what I'm about to say here. We are in a macro uptrend, but we are in a slightly bearish micro trend. That's what we in right now. Okay, so that institutional footprint right there, right? Now I want you to see something. That one institutional footprint, watch this. I'm about to show you something. Took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 1, 2, 3. That one institutional footprint took out 23 days of gains. I'm going to put that in perspective for you. That one institutional footprint took out 23 days worth of market behavior. So it took us 23 days to get there and 1 day to take it all out. That's crazy, right? So count again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 21, 2, 23. So 22 days. So that one institutional footprint took out 22 days, previous days of market upward momentum. Does that make sense? Does that make sense, everybody? You see it? Are we acknowledging what we see here? Right? And so what you would say is that is a bearish engulfing candle. Why is it engulfing? Because it took out everything. It engulfed everything or things prior to it. It engulfed it. At least the previous candle. It engulfed it. So that's called a bearish engulfing candle, right? But in technical, like it's called if you're looking on a chart, that will become what's called an institutional footprint. That's a bearish institutional footprint. Okay. All right. So let's go a little further than this. All right. Let's go. I'm going to take you a little further so we can. And so this is what I was telling my people in a group today. So I'm going to tell y'all because the day is over. Now, also, we got to mark this out right here. We got to mark out this that we had. I'm going to do two things right here. We had all-time high and previous week's high right there. Right? That was previous week's high and all-time high at the same spot. Right? You had all-time high and previous week's high right there. And then the next thing we're going to do is point out, this is going to help us box it in. So you had all-time high, previous week high, and previous week low, right? You had an all-time high, a previous week's high, and a previous week's low. So let's confirm that we had that. Boom, it's confirmed. All-time high, previous week's high, previous week's low. So we confirmed that. So the next thing we want to throw on the chart right quick is we want to make sure we in the right movement. We want to make sure we in the right. All right. So on the weekly, we are above our SMA, right? On a daily, we have some conflicting. So right now we see we have conflicting. We have something that's conflicting, which is the 20 SMA, which is important because if it's above the 20 SMA, then that tells us what? We are in bullish. That means bulls or buyers are in control. Right? So now we know, here's what we know. We understand that above 673, there's some stops above that. There's clusters. There's liquidity sitting above that. So the next thing we want to tell ourselves on our daily is, so I'm going to speak this in as if today is still Friday, so I'm going to say this from yesterday. So watch this. We're going to mark this. We're going to change the color on that to blue. And then we're going to mark this previous day's high, right? Then we're going to take and mark this again right here. And we're going to mark previous day's low. So now what we just did, my bad, let me move this. So now what we just did was, we just boxed in what we needed to see. So the reason we walked previous week high, previous week low is because now we know for a fact right now that based on what happened last Friday, we know two things. We know that the buyers need to get back above previous week's high to reclaim momentum. And then we know sellers want to push it past previous week's low so they can keep on with the selling pressure. Now, this paints what's called a pathing for us. This is called pathing, meaning it's giving us a path forward. Like, so based on last Friday, we need a path forward seeing this. Am I making sense? All right, so here's what we got. We got 5 candles that's inside of that red candle. That's Monday, Tuesday, Wednesday, Thursday, Friday. This is going to tell us what happened that week, this week here. And what I want to make an attempt to do is say, hey, here's what we need to do next week, y'all. Right? And here's what we have to be looking forward to. Now, we got to remember, news is also a catalyst for us. Why is that? Think about something that came out today. Today, Trump came out and said, before he dropped the F-bomb, Scott Bessent first said, hey, we're going to do a deal with China. Now, mind you, here's what happened. I want to show you something, and I want to show you why these things make so much sense. And I told my people in the Patreon this all the time. I say, listen to me, y'all. News don't just come out for no reason, right? So here's what happened. Watch this. Last night, if you go look at the ES and the NQ from last night, the futures were down 100. I think the futures was down bad. The futures was down lower than previous days open, which is not good. Immediately, Trump made a tweet that said, we're going to talk to China. Everything going to be all right. So we woke up this morning when the bell opened, we wasn't on the lows no more. We had erased all of that. Right? We had erased all of that. He said, hey, we're going to be all right. We're going to talk to China. Then Scott Bessent said today, we're going to be all right. That gave the market a little bit more what? Reprieve, because dealing with China is going to always be the wild card with America. It's going to always be the wild card. So let's get into it. So here's what we know. Going into this week with these 5 days, so we're going to start from this first green candle. The goal going into this green candle, going into Monday, is to do what? get back on top of previous week's high. So what happens? Watch this. So first of all, we got to acknowledge this. There are some trapped buyers off this red candle. Well, trap. What do you mean they got some trap buyers on it? Yeah, I was up at 3 a.m. I was like, oh, it's looking bad. Yep, Uncle T, 400%. Right? The market was looking, if you were looking at the futures at 1 o'clock last night, you was predicting for a bloody day today. You was predicting a bloody day today. Now watch this. I got on the Patreon this morning and said something. I said, hey, y'all, the day starting off red. I said, watch this. I said, Wednesday and Thursday, we had 2 failed attempts at turning green. We had an early morning rally, but at 11:30, the market went red. I said, today we opening up red. Trump got it. We got a tweet from Trump. I said, hey, we going to end green today. It's going to reverse what's happening. If you're in the Patreon, didn't I say that? All right, so watch this. I got to acknowledge this because this is me telling y'all, if once you learn how to tell stories on these charts, it gets a little bit easier for you. So let's go back to the institutional footprint, the big red candle, the engulfing candle. Let's go back to that. You see how I hit all-time highs, right? Well, notice something. You see that wick right there, that little tail sticking out? Well, what happens is, I want you to understand something. The sellers rejected that. Well, they had buyers that got in that. So there were some buyers trying to say, hey, it's going to go up some more. Well, guess what happened? They got trapped. And they got trapped from 637 all the way down to 653. Okay? What do you mean they got trapped? Okay, watch this. I'm going to make it easy for you. How many times have we seen something running up and we try to jump in it? Now, let's just take away this big red candle, and you don't see that happening. Mind you, when you woke up the next morning, watch this. Look at the candle next to the red candle. Look at the candle before the red candle. That's the candle that actually hit all-time high, right? But notice this. After it hit all-time high, the next day, so remember, red candles talk. I'm about to say talk. Red candles open at the top. So what happened was it hit all-time high. Watch this. And then it opened up a little lower, right? So the top of that institutional footprint is where, not the wick, but the top of that body. Let me mark it off because I know some people going to be like, Trap, you talking to. I don't understand that. So know that a red candle opens here. So it opens there, right? So watch this. So it hit all-time high. Watch this. It hit all-time high, and then it closed here. So then the next morning, watch this. This is trap sellers right here. This is trap. This is how buyers got trapped. It opened, it closed there, and then opened where I put the other green one at. And then watch this. When it opened there, you saw sellers get in. How do we know sellers get in? Because it went back to where? All-time highs. But watch this. Remember, mind you, the market opens at 9:30. Remember, Friday, Trump tweeted at 11 o'clock. So watch this. You got in that trade thinking we was going back to all-time highs, and then Trump made the tweet and you got stuck. So you hit all-time highs, Trump made the tweet, and all the buyers got caught up. They got caught up, they got trapped. And they got trapped from that all-time high all the way down to, watch this, to 653. Man, we trapping or we trapping? We trapping or we trapping right now? So at that big red candle, you got a bunch of buyers trapped in that saying, hey, let me out, let me out, let me out. And the seller's like, nope, we ain't letting your ass out of there. You stuck. So now what happens in this situation is if you sell, then you become few that pushed it to the downside. So this is why you see such a big red candle. Because not only are the institutions pushing it down, now the trap buyers are selling. They're like, nah, I'm about to get out. 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 And so now they're adding fuel to the fire. Look, my guy right there said facts. I got caught. I was in a 1 minute from selling, but I was walking into the gym. Right? So that's what happened. And it happens all the time. People get caught all the time. You get caught all the time. You know what I'm saying? People get caught all the time. Sellers get caught and buyers get trapped. That's the nature of the game. All right, so now here's what happened. You pushed all the way down. And then guess what? Monday, we didn't have no data. So now we get this next green candle. Watch this. Monday, we didn't have no bond market open. It was all stock market. So guess what happened? We get a gap up. That's the small green candle. Then watch this. Once that gap up happened, notice the top of the wick. Let's open it up a little bit more. I'm going to open it up for y'all so y'all can see. That way we can tell the story the right way. So notice we on this next green candle, small body green candle with the wick at the top. So notice this. Watch this. We get a gap up from the previous week's low of Friday. We get a gap up on this candle here. You get a gap up. Well trapped. Where's that gap up at? We open up right here. We open up right here. So guess what happens? When we open up right there, guess what happened? Why don't want to come off? Because I don't want to confuse nobody. When we go up, guess what happened? You still might have some trap buyers in there, but they're like, guess what? We good. But guess what? The market goes up. Now, watch this. You get some more trap buyers. Well, trap, how they get trapped? Well, notice that wick runs right into our 20 SMA. Well, as of right now, that is what the sellers are protecting. The sellers are saying, hey, we not letting them get above that. So guess what? Those people that came in late, they say, hey, we about to go back up. And guess what? They got trapped. So now you got some trap sellers from Friday. You got some trap sellers from Monday, some trap buyers from Friday. And you got some trap buyers in Monday. They're like, oh, man. So then you get Tuesday. What happens? You get a lower opening. So now Tuesday, what happens is you get a candle that opens now lower than Monday's close. Because Monday's closed at the top. You get a close here. So you got some sellers that got caught up in here. Buyers that got caught up in there. So then Tuesday, you get a lower close, which is not what you want to see if you're a trap buyer. If you're a trap buyer, you want to see another candle over candle, meaning you want to see this next candle. You want to see this next candle open up here. You don't want that candle opening down there. Because now that's telling you, hey, buyers has pushed us down. Thank you, Dan C. Say, hey, bro, I got caught in that Monday trap. I'm glad people saying that in the chat because that lets the other people say, damn, I see what he talking about. Right? That lets other people say, damn, I see what he talking about. Right? So thank you for the people who saying, hey, Trap, I got caught up in that one. Hey, Trap, I got caught in that one. Thank y'all for saying that because you allowing new people to say, yep, damn, I understand what he's saying right there. Right? That's helping people say, oh, I got caught in that too. You feel me? So I appreciate y'all for saying that. All right, so let's go a little further. So now what you have Wednesday, so now we on Tuesday. So now Tuesday, look what happens. Something interesting happens. Tuesday, you get a candle, but you never get back to what? You never get back to Monday's high with a close. Right? Now, here's something that's interesting about Tuesday. Tuesday actually broke Monday's high. But watch what I'm about to say here. Watch what I'm about to say. This is going to be good for you. It didn't confirm it, meaning it didn't close above it. It just touched it. Now, I'm about to tell y'all something that's going to be interesting. I'm about to help a bunch of people out right here. Y'all see that 20 SMA? That light blue line that's running across there? There's also people with stop losses right there. And guess what happened? Took them out too. There's orders sitting right there. Because there's people that's saying, hey, if it breaks this, so it took them orders as well. Classic armed robbery. There's people that's using the SMA, as a stop loss area, and they got their stops right behind the SMA. And guess what happened? Guess what the market says? Hey, we need that money too. So we ain't got them stops and then pushed back down. Right? So that was an armed robbery move right there. Because, and you can see it plain as day. There's people that's using the SMA. Why? Because it's an indicator. The market not stupid. That's why they call it smart money. They know how the average person look, and they got people that say, hey, it's a choppy market. Watch this. They got people, they understand that there's people saying, hey, this is a really, really choppy market. So what you do in a choppy market? You do what? Make your what? Stops tighter. Thank you, John. Jock Strap said, man, that's what caught me, Trap. I ain't even gonna lie. Good. So think about it. In a tight market, when people know it's a choppy market, what do? They make them what? They make them stops what? Tighter. Why? They want to get a little money, but they want to play it a little safe. They want to play it more safer because they understand it's a choppy market. So what do? They make their stops really, really tight. So now they say, hey, I'm gonna use that SMA as a stop. So what happened? Market says, hey, I know they got a bunch of them right there. Guess what it does? It pushes up. Let me get them stops out. And it uses that money because the market is always hunting for what? Liquidity. Am I making sense, everybody? Am I making sense, man? Just say, Trap, we trapping right now, bro. I don't want to waste your time. I come here to help you out, help you understand something, help you understand what's going on. I don't want to talk over your head. I can easily, I can easily try to flex. Yeah, I can talk about inducements, and I can talk about bull flags and bear flags, and I can talk about so many different patterns and stuff that I don't learn. But what I've learned is, bro, simplicity is key. Simplicity is key. All right, so let's go to Wednesday. Right, so Wednesday, it's the doji candle that we see, the red candle. Now, Wednesday was interesting because guess what? Wednesday opened on top of the 20 SMA. So not a market playing tricks with us. Not a market playing tricks with us. The market is saying, all right, yo, we about to play with their ass. So now watch this. The market opens on top of the 20 SMA. That's interesting. So now guess what? You got another group of buyers saying, hey, we're going to use our stop right here because now once the market open here, we're going to use our stop right here. Guess what the market do again on a Wednesday? Doji candle. Wipe them stops out again. We're going to get y'all too. We got y'all on the upside and we got y'all on the downside. Now we got y'all both ways. Now, here's what we understand. We into Wednesday, but I gotta go back to Tuesday right quick. Let me go back to Tuesday right quick. Let me tell you something that's really, really interesting I forgot to mention on Tuesday. Notice how the wick on Tuesday touches the previous week's low. I forgot to say this. This is important. This is important. The buyers are 100% defending 653.02. The buyers are defending 653.02. Watch this. So the market on Tuesday comes all the way down to that same level, touches that level, and then gaps up the next day. So that tells us for a fact that it used, I'm so glad I get to tell y'all this. It used the liquidity at the bottom of that to gap up. Ooh. Does that make sense? So the buyers were descending. They're saying, hey, we not letting y'all get past this, because if y'all get past this, y'all ain't gonna know how to act. If y'all get past this, y'all ain't gonna know how to act. Y'all gonna show y'all gonna go crazy. So what they did, they touched that, and it's called, watch this. This is called absorption. So the buyers absorbed all that selling pressure and pushed it right back up. Does that make sense? Does that make sense? Because mind you, watch this. This is how you know that happened. Because green candles start where? At the bottom. So that means before it was a green candle, it was a red candle because it did this. Watch this. I'm going to show it to you. Before it was a green candle, it was a red candle. How do we know? Because green candles start at the bottom. So that means essentially it started off right here. It did this. It had to push down first. It had to push down first. Now, there's a little bitty wick underneath there. Little tiny wick underneath there. So it went and grabbed that, and then that's what pushed it back up. Am I making sense here? So it's guarding that. So it went down, grabbed that, and then used that to go back up. And then the next day, how do we know? Because it pushed, it went crazy. Look, it pushed all the way up. Right? So that's how we know that the buyers defended that. It let them go down to that 652-ish, 651-ish, something like that. Grabbed that and then shot right back up. Am I making sense right here? But it also tells us this. Watch this. It got to that SMA 20, and the seller said, what? Y'all going too damn far. But here's how we know they got fuel in that. And it wasn't nothing to just be crazy about. How do we know they got fuel in it? Because the next day, what did it do on Wednesday? It gapped all the way up. So that means they still had fuel. Buyers were trying to do what? Reclaim. Now notice, watch this, notice this. 3 days in a row, we still didn't reclaim previous all-time high. Okay, so now that we 3 days in, now we got to tell a real story. Now we got to add another piece to the story. What is that, Trap? Well, we got to add the big dog in now. We got to throw the fib in now. Well, damn, Trap, why we got to throw the fib up in there now? Because now what happens is we got a swing high that came down to that created a low. And now that we got 3 days in, now we got some chapters to the story. And we got to figure out now, what is the line in the sand? So from the swing high, the top of all-time high, to that 0.5, that would give us our line in the sand, or they will call that the equilibrium. So the equilibrium would be about 650, 665. My thing don't want to go exactly on it. 665.15, something like that would be the equilibrium. So you write that down. Right? So you say, okay, about 665.25, something like that. So from swing high, all-time high, right? From all-time high to the middle, watch this, a 50% retracement, meaning a 50% retracement from all-time high would be about 665. I don't know, my thing don't want to get right on it, but it would be 666. 666.21. So 666.21. So here's what we need. That's our line in the sand. So here's what you got to tell yourself. You need the buyers to reclaim 666.21. That's the line in the sand. Well, what does that tie into? Well, 666.21 puts us on top of our what? SMA 20. Well, Trap, we did say if we get on top of the SMA 20, that tells us what? Buyers are back in control. So you mean that's called alignment. That means the indicators are aligning. Hey, man, get out of there with that market of beast stuff, man. Right? So 666.21 becomes a serious level for us to pay attention to. That's a dynamic level for us. That's alignment. Right? Everybody with me right now? We trapping or we trapping? Let me know we trapping, y'all. Let me know we trapping. I know it's late. I want to try to get this over with real soon so we can. I want to set us up for next week, though. That's all I really want to try to do. All right, so let's go a little further now. Now that we understand that, we noticed something a little interesting, though. Going into Thursday. Let's talk about what we noticed going into Thursday. We noticed something interesting. The sellers have created what's called a supply shelf. Well, what does that mean, Trap? That means you can say it's resistance. I call it a supply shelf because we're in a short term. But if you follow that line, I put all the way over 666, 666.73. Notice if we go way over here, watch this. I'm about to show y'all something that's going to be real cool. Notice that bar and those two lines also touch that same line. And if we come all the way back over, we got back-to-back days, Wednesday and Thursday. That's 666, 666.73. So now we got to tell ourselves something. Buyers need to close above 666.73. But that also tells us what? What that aligns with. That means it's above our what? That means we're doing the right thing. So 666.73, it's above 665.06, which is our 20-day SMA. It's also above 666.21, which was our what? 50%, our line in the sand with our Fibonacci. So that tells us if we can get to 666.73 or 667 with a candle close, not a wick, we need a candle to close above it. That means buyers have taken control. But we got one more thing, Trap. We got one more thing we missing. Well, what is that? Previous day highs at 668, Trap. Because now we into Friday. We got a green candle on Friday, but the previous day from Thursday now has created what, Trap? It's created a previous day high at 66871. It created a previous day low of 65711. Now we got a story. Because now this tells us what we got to do going into next week. Well, how is that, Trap? Well, we know that the candle now is, we still inside. So we had 5 days and we did not reclaim our all-time high. And we did not break our previous week low. So we still trading inside of that red candle. That what? Institutional footprint. So we still trading inside of that institutional footprint. But here's something real dope happened today, Trap. Well, what happened, Trap? Well, we saw today that our candle, our green candle from the day, it did break above our SMA 20, but it didn't close above it. Okay, so that means we still have to break. We gotta break because now this changes. So now going into Monday, this changes because now Monday, this look like this. Right? But what is important is that's what Mondays look like. So going into Monday, your previous day high gonna be 658.14, and your previous day high Monday gonna be 665.06, and your previous day low gonna be 658.14. But essentially, why this never changes is because we still got to break. Now, instead of being previous week's low, the institutional footprint becomes the thing that you have to break. You have to break, fight, reclaim for that institutional footprint, but that supply shelf is still sitting there. Because now you need buyers to reclaim. What 3 numbers do we need buyers to reclaim? We need buyers to reclaim our 66621. That's our SMA 20. We need them to break the 66673. That's our fib. That's our supply shelf. And 66506. So we going into next week. If you're looking at the SPY, that's what you need them to break for you to get buyers to be back into control. You need them to break. Just say this. Your number next week that you are looking for is 667. $667 on your SPY. You need a candle close, not a wick. Meaning you need a candle to close on top of it and then a confirmation candle so you can go up. That's going to tell you, hey, buyers have gained some control, some momentum. If you just get a wick and it comes back down, that don't mean nothing. Let's get the likes so if I give y'all some information that y'all like. Somebody say, I believe you're reading the story wrong because November we not going to have the CAD for Black Friday. How am I reading the story wrong if we not even in November yet? I'm not in November yet. I'm still in October. I still got 2 weeks left in October. I can't even read nothing for November. November not here. I don't got that kind of eyesight yet. I'm only talking about next week. I'm not talking about November. So I'm not even in that chapter yet. I'm only talking about next week. So you need a close going into next week. You gonna need a close above 667 to reclaim that. Now you can get to your hourly, and you get to tell another. It's the same story happens on an hourly, but now it's just you get a little bit more information. Now here's what I will say: the hourly does confirm what you saw on the daily. Yeah, we going from candle to candle. Now I could have got into the 4 hour and the daily, and I mean the 4 hour and the 1 hour a little more, but I just want you to get on that. I don't want to keep y'all all night because I like to, you know what I'm saying, get into it. But man, I hope, let me know if this video helped y'all out, man. Let me know if this video helped y'all out a lot. Let me know if y'all, you know what I'm saying, if y'all got anything from that, man. Let me know. If I try to help y'all, you know, just let me know if y'all like these little Friday night sessions. Let me know if y'all like these Friday night sessions, because I don't mind doing them, you heard me? I don't mind doing these Friday night sessions, man. You heard me? Little session. Little Friday night session, you heard me? All right, man. So do me a favor, man. If you want to come join the Patreon, we got a link in the bottom for the Patreon. Thank y'all for just, you know what I'm saying, tapping in with me tonight on this Friday night, spending about an hour and something with me. It's almost an hour and a half, a little more than an hour and a half, man. Thank y'all for spending that time with me, man. I appreciate y'all so much. More than anything, I would like to say just, you know, go to, you know, check out some of our previous videos that we got up. We got a video up, this stock is set to explode, about MP. We got another one, 0 to 100K. We got a few videos up that's real dope that I think y'all like when it comes to, you know, what we doing on this page. Three of the easiest ETFs to build wealth with. That's a good one. This stock is set to explode again and is backed by the U.S. government. That's a good one. That's our last 2 videos. So definitely, man, go check the last videos we got out. I love y'all. I appreciate y'all. Nettie, what's good, love? I hope everything good. I hope you're being blessed. And I'll see y'all this week, man. So hopefully this helped y'all out. It's your boy, the Wall Street Trapper, man. Salute, you hear me?